Good afternoon, everyone. My name is Eveli Lepamets. I am from Nasdaq Tallinn and welcome you all today on EfTEN Real Estate Fund Free webinar. The webinar will be hosted by the CEO of EfTEN Real Estate Fund Free, Mr. Viljar Arakas. Firstly, Viljar Arakas will introduce the offering of the shares, the fund's portfolio, recent track record, fund manager, as well as Baltic commercial real estate market in general. Right after the presentation, we will open the floor for questions. I invite you to use the question box on the right side of the screen to send in your questions. All questions will be answered after the presentation. And now, Viljar Arakas, if you're ready, please, you can start your presentation.
Good afternoon. Thank you for participating. Thank you for coming to the webinar. And let me then just start from introducing the fund manager before we go to the other sections of presentation. EfTEN Capital is founded by me and in addition 10 other partners basically 10 years ago, 9.5 years ago. Today we have grown to be the largest commercial real estate fund manager in the Baltics. We have 42 commercial properties, over 900 tenants, and basically 500,000 leasable square meters. What is also what we regard is very important, that we have foot on the ground in all of the 3 Baltic states. We have totally 46 people in EfTEN team. Our Latvian team is as big as Estonian. Lithuania is a bit smaller but growing fastly. And what we do, we manage only commercial real estate funds. If you look to the presentation lower side, you see that in a Fund 1, or in Fund 1 we started in 2009, which have had totally 28 investments. We have made an exits from 9 up to now. And the fund, the NAV growth since inception has been 180%. Actually, this figure is over 300% because it doesn't take into account all dividends which are paid out and all cash buybacks which have been done up to now. So, but the return on invested capital, which for us is the main criteria, has been like 22%. And for us, the return on invested capital means the capital which is then actually paid into the fund and the return of that capital per annum. In our first fund, we had institutions as well as private investors together. Then in 2015, when we decided that we will close the Fund 1 for the new investments and we will put it on a holding mode, we created 2 additional funds. Fund 2 is only for institutions and it's following core plus real estate investment strategy, meaning it's buying assets mainly only in capitals and mainly the bigger the better. Minimum asset for Fund 2 can be 15 million euros. And then we launched Fund 3, which is aimed for retail investors only, or let's say mainly. And this fund is following opportunistic and value-added strategy by having its lowest investment, only 3 million euros, and chasing higher yielding properties, not only in capitals, but also outside of the capitals. Our assets currently, as I said before, are 500 million altogether. Half of that is in Estonia. In Latvia, we started our activities 4 years ago. So in Latvia, we have like 1/3 of our assets, and then rest of that in Lithuania, where we started in 2015. Very briefly about the Baltic real estate market. For us, the main issue and the main handicap of the Baltic real estate market is actually the market liquidity. If you look the real estate investments done in Baltics, then in the last cycle in 2007, it reached 1 billion euros annually. Today, it's well over 1 billion, but still the same area. But if, for instance, if we try to compare real estate investments per capita, then Baltic states has like 7 million people altogether. For instance, in Finland annually, where Finland is having like 5 million people, the real estate investments are 4 to 5 times higher than in Baltic states. Not even to mention Sweden, where the level of investments is 20 million euros per annum. What we think what makes our offering and Baltic region attractive is the fact that our lending rates over here are as low as in Scandinavian markets, but having higher yields. This figure this map actually tells you that if you look the prime office rent levels, then Baltic states are having basically the same figures in Tallinn, Riga, and Vilnius. So it is one economical region, and there isn't much difference either you invest in Estonia, Latvia, or Lithuania. If you take the 16 euros of prime office rent in capitals times 12 months per year and divide it with, let's say, 7% yield, you get the figure that best office in Baltic states should cost you like 2,700 euros per square meter. If you do the same exercise with relative figures in Finland, you get figure per leasable square meter like 5,500 euros per square meter, and not even to mention Stockholm, which is completely on its own world, where prime real estate or prime office real estate costs you like 16,000 of euros. So that's why we think Baltic states is attractive, but of course we are not very optimistic of going forward from here, meaning that we see a lot of new supply coming to the market, which actually means that the rent rates over here will not grow. It will be more or less stable, or even for lower quality properties it could fall further. Now coming closer to our Fund 3. It's cash flow generated commercial properties only. As I said, it's aimed to the retail investors. Currently, we have 300 private investors from Estonia. And if you look at the portfolio split, then basically it's a Lithuanian fund. 70% of the assets up to now are in Lithuania, 7% in Latvia, and a quarter in Estonia. As I said before, we take Baltic states as our home market, and for us it actually doesn't matter whether we invest in Latvia, Estonia, or Lithuania. We invest there where we find the best opportunities. And if we look at the portfolio by sectors, then you see that 46% is retail, 32 or 1/3 is industrial, and office is 22%. That's what we regard as healthy split. Even maybe office should be like 1/3, which we want to grow further from here. Our NAV has been stably growing. When we launched the fund, when we made the first share emission in 2015, share price was 10 euros per share. Now the IPO price will be 14 euros, and we have paid out dividends 1 euro per share in total for 2 years. So we have turned this actually. Sorry. Excuse me. We have turned this 10 euros to 15 euros. And our return on invested capital has been well over 25% for the fund so far. The best thing in our business is its incomes are very stable. This EBITDA percent from turnover is roughly 75% till 80% every month. And out of our EBITDA, we pay out 1/3 as net dividends. So the best about our fund is like the future cash flows are quite easily predictable. Now going over our 8 assets, I would like to make a comment for each and every of those. Saules Mestas is our biggest investment, our biggest shopping center and our biggest investment in the fund. Saules Mestas is located in Šiauliai in Lithuania, in a town where is 100,000 of inhabitants. 20,000 people visit this center daily. So it's very highly used because of the fact that in this in Saules Mestas we also have as a town, a regional and international bus station. And out of this 20,000, 60% is making some kind of purchase. So we regard this as a very healthy figures. It's a very lively place. It has more than 110 tenants. And we have our special team which is handling this center every day. We have 5 people, dedicated professionals working with this center daily. For instance, also to give you an example, we operate ourselves the largest kinder playground in the city, and also we organized summer terrace concerts in our top roof of the center. Currently, the vacancy is just 5%, but of course every month something is changing as some of the new tenants coming, also some smaller maybe leaving. We made a complete reconstruction to the facade of the center as it was constructed 10 years ago. So this look of the center is basically as new. Then going to the next, Hortes Gardening Center in Tallinn is the smallest of our investments. We bought it in May this year. It's a sales and leaseback transaction to the most known gardening center in Tallinn. It's a specialist shop with a huge outdoor sales area. And Hortes as a company is owned by Livonia Partners private equity group run out of Tallinn. And we plan to build for Hortes another store to Lasnamäe, to Tallinn. Then Selver Retail Center in Tallinn is just a neighborhood grocery store in Laagri, in exit from Tallinn to Riga on the right-hand side. And this part of road is actually the most traffic intensive road in all Estonia. So we think it will be very successful project because of the fact that it's servicing huge residential area next to Selver store, and it will be opened in December this year. We bought it in May, so we have taken construction and part of the development risk. Here is mentioned that 99% of leasable area is rented out. Today I can say it's almost, or it's already 100 as the last 27 square meters was taken up as well. Then office portfolio. We have 2 buildings in Vilnius, which are located in different parts of Vilnius, but relatively similar. Those are B locations, I would say, but the quality of the buildings is very good. Ulonu office building was constructed 4 years ago by BST, which is one of the big construction companies in Lithuania. It's rented to more than 20 different tenants. And Laisvės 3, which is located in the other part of the Vilnius, was constructed 13 years ago by ELL Group, belonging to the same owners as the largest construction company, Baltics Merco. So both of those office centers are like B locations, but quality-wise very good buildings. We don't have there any particular big tenant whose risk we would suffer if the one or the other tenant decides to leave. So it's leased to a number of smaller companies, and the rental rate is approximately 10 euros per square meter per month. We see in Vilnius everywhere a huge office stock being built as well as rented, thanks to the Lithuanian government incentives in shared service centers. So we feel that those assets are well positioned, and also we have price advantage to the new centers which are being built and leased on a higher level. Both of those office buildings are having currently 0 vacancy. Then the last part of our portfolio is actually consisting of 3 different properties. On this picture here, you just see one of those. We made a sales and leaseback transaction with one of the big logistics companies, TSV, last year, or actually 2 years ago. On a picture is their logistics center in Tallinn, and we also own TSV in Riga and Vilnius. Riga center is currently undergoing heavy reconstruction. It will be finished by the April-May next year. But all of those 3 centers are leased by TSV Group for a long-term basis for 10 years triple net contracts with possible extensions after that. So if we look our financials all together, then our current property or portfolio is yielding on net yield basis 7.7%. Our assets are currently 91 million euros. Those figures here are September figures, end of September compared with the end of last year. Our loans to value are basically 50%. Our fund terms tell us that we can't take higher leverage than 65% when we buy a certain property. And we also pay back loans, meaning there is an amortization schedules which are in average 22 years when the loan duration is just for 5 years. And the current average interest rate is 1.7%. So investment properties is 85.5 million euros out of 91 totally. So it's actually very easy to read our balance sheet. Investment properties are valued semi-annually in June and then in December. It's done by one real estate advisor or real estate appraiser only. Currently, we use Colliers in all 3 Baltic states. We don't have several real estate appraisers, we just have one. Fund equity level is before IPO 40 million euros, and the sales incomes and EBITDAs has been growing because of the fact that fund has been buying in new properties. So we regard this as a normal way of business going forward from here. As I said, dividends before that, we have paid out €1 for per share for last 2 years. So it was 63 cents in which we paid out this year for the last year, and that's what we also see going forward. Our dividend policy is that we pay out 80% of our annual free cash flow, which will be decided then by annual general shareholders meeting in every spring. So that's why we act as any normal company when we pay out dividends just once in a year. Now, coming to the fund terms, I would also walk you through from here, not in very detailed way, just to give you a bigger picture. Actually, the EfTEN Real Estate Fund 3 is a kind of a mix as being an alternative investment fund, meaning by the EU regulations as AMFT fund, which is regulated by Estonian FSA, and in the same time being a normal limited company. So that's the reason that when we become listed, we will become listed not in a fund sections of the Nasdaq Baltic, but in a main list of Nasdaq Baltic. The fund manager is an EfTEN Capital. Fund terms, actually, which you read here, 10 years divided by 3-year investment period, 5-year holding and 2-year exit, is irrelevant as it is until the fund becomes listed. When it's listed, the fund will be evergreen, meaning no certain exit dates will be set. investment committee as well as supervisory board members is four members, which I will introduce a bit later. And our auditor is PwC currently. Our investment style or strategy is value-added and opportunistic. We do not concentrate only on capitals, as our largest investment is in Šiauliai. So it of course means that there is a illiquidity discount to those opportunities or to those investment targets. But in the same time, if we make our fund shares liquid, then still we can consider this as a liquid investment on investor level. But clearly, if we buy a property in Šiauliai or for any other towns outside of capital, you get a certain premium, and every euro you earn in capital is as good as every euro you earn outside of the capitals. It doesn't mean that we look around only outside of the capitals, but it means like we see that there is kind of spread which in certain properties can be interesting for us. Minimum investment per property is 3 million euros. All our different investments are in different SPVs, meaning no mother company guarantees are given. So if the real estate fund 3 as such is just a holding company of these individuals SPVs, where all those 8 investments are being bought. We also take part of not development risk, but I would say construction and lease out risk. We are very flexible of doing forwarding financing deals, buying some properties before the construction, for instance, the case of being in Selver in Tallinn. So this is things what we do, and where we see we can get better returns than just buying ready-made properties. Our fund size currently is, as said before, equity-wise 40 million before IPO and total assets 91. Leverage we have written very concretely to our fund terms cannot exceed 65%, because one lessons learned from previous crises is that too high leverage can kill real estate funds and real estate companies during the times of crisis. So clearly we don't want to over leverage our portfolio. Currently it's 50-50, and we see this as a healthy figure, and we also have some room to grow up to 65 if we need to do that. And our equity IRR return target is 15% per annum. So we see that our NAV has been growing basically plus minus 1% every month for the last 3 years. But then, of course, if the annual revaluations come to play and we have had supporting real estate market, that's why our returns have been up till now clearly higher than we have promised to our investors, or when we have targeted to promise to our investors when we launched the fund. We regard EfTEN Real Estate Fund 3 not as a growth stock, but just as a dividend-paying stock. So that's why annual dividend is our main criteria, which we would pay out every year. Fee structures. There is no entry and exit fees. Subscription fee currently is 1% to securities account holder. It doesn't mean that it will be paid to fund manager or the fund. It will be paid to the bank where the investor account is hold it. But our management fee annually is 2% flat on invested equity. It means when the certain part of equity is invested to the concrete project, then 2% is calculated as the annual management fee, and it doesn't change whether the value of the investment grows. So it's not valuation dependent, and we think it's fair to investors and fair to fund manager. Success fee will be now changed. Before it was based on the assets actual returns. Now it will be based on the return of or the value of the share. meaning it will be 20% of the highest closing price of the end of the last year. So what it means, let's say like this, that if our share should close in the last day of this year, let's say on a level of IPO on 14 euros. So, and if it closes in the next year on a higher level, then from this difference, 20% is paid out annually as the success fee, out of which is deducted 10% of hurdle rate, which will be like a base level from if the return is lower than 10%, then no success fee is paid. And it is a high watermark structure, meaning the highest year-end closing price will prevail for all the future years to come. Then from corporate governance point of view, management board is, I'm the fund manager, and Mr. Tõnu Uustalu is the second member of the board, who is our investment manager. Supervisory board, chairman of the supervisory board, Arti Arakas, is my brother. He is also the founder of EfTEN Capital, but he's the largest shareholder in the fund. Together with his partner, Mr. Frank Õim, they hold 15% of the fund shares. So it means roughly 6 million euros before the IPO. Olav Miil is also EfTEN Capital founder and supervisory board member, as well as Sive Penu and Sander Rebane. So what is very important in our case is our fund manager partners, 11 of those, are holding directly or indirectly before the IPO 35 to 37% of the shares. So we invest our money mainly, and then we offer this opportunity to wider audience, to wider investor, to invest together with us. That's the golden rule. That's the baseline where EfTEN has been always built on, so that we just do not invest other people's capital. We invest our capital together with other investors who would like to join. And very briefly about the current offering. As I said before, the fund will come termless or evergreen once it's being listed. Our dividend policy is very straight. 80% of the free cash flow will be paid out as dividends annually. And looking back to our 2-year history, it's like 1/3 of the EBITDA which has been paid out as a net dividends in the last 2 years. Our offering started on the 30th of October and will end in next Friday, 10th of November. Currently, those shares are offered only in Estonia. And why not in other Baltic states, as the fund currently is unlisted alternative investment fund or AMFD regulated fund. Then we see a heavy burden of regulations in Latvia and Lithuania to market the fund as such. So that's why we have actually skipped this part, as it's being too difficult to make a retail offering over there, and that's why we offer it currently only in Estonia. But once it becomes listed, then all the investors anywhere in the world can buy it as any other share in a Baltic main list. The share issue is divided into 2 parts. Fund manager is subscribing directly 87,272 shares, which was the amount of success fee reserve which was gathered up before the IPO. So we had in our fund regulations stated a rule that once the fund becomes listed, then the success fee reserve will be transferred to the fund shares to the fund manager. And then 250,000 of shares we will offer to the public, wider public. The share issue price is 14 euros per share, which equals exactly to our September end NAV. There is no premium to that. And actually our transaction as such is relatively small, if not to say very small. It's only 3.5 million euros. And the reason is that in a current real estate environment where we are in Baltics, it's very hard to find suitable investment targets where we would like to invest our own money and then offer this opportunity to other investors as well, which which meets our conservative investment criteria. We don't like to go to the lower yield levels, net yield levels than 8%, but currently the prime yields are even going south from 6%. So that's why we see today limited number of opportunities going further. With the proceeds which we are going to raise, we will build for Hortes a new gardening store to Tallinn, Lasnamäe, next to Bauhaus and Selver Center. And then we will finish Selver construction in Laagri as well as DSV construction in Riga by the beginning of the next or by the end of the first quarter of the next year. And we hope that the fund will start to trade on the 1st of December this year. So thank you. This is initial presentation, and I'm ready to answer all the questions what you may have.
Dear audience, once again, I invite you to use question box to send questions in to Viljar Arakas, and we give you a couple of minutes to do that. Thank you. As we have no questions, Viljar Arakas, I thank you for the presentation, and participant, thank you for joining today's webinar. Just a second, we just arrived one question. Viljar, I will read it for you. In what stage is Lasnamäe Hortes? Detail plan received, projecting?
Yes, the detail plan is in a late stage of being agreed or being valid, I think it's fair to say in the next month. So we have initiated the first project technical documentation process. We plan to start construction earliest spring next year, and as it is relatively easy construction, meaning gardening centers are not tailor-made. They are usually imported from Holland, where is a long tradition of producing centers like that. So we expect it to be ready by the fall or let's say Christmas season of next year, or if this should not materialize, then latest by spring 2019. That's the current timeline.
Thank you for the question. Now we will give you 1 minute. If you would like to ask, please use your opportunity right now. seems that we have no more questions. Once again, Viljar Arakas, thank you for the presentation, and dear participants, thank you for joining the webinar.
Thank you. Have a nice day. Thank you. Bye-bye.